All right, let's talk. If you're a trader, you probably use the RSI. But do you ever feel like it's, well, a step behind? Giving you signals that are just a little too late, or maybe just plain confusing? If you're looking for an edge, something that can help you see those market turns before they happen, you are in exactly the right place. Today, we're diving into a really powerful tool designed to do just that.
So, here's our game plan for today. First, we'll talk about the problem with the standard RSI that so many of us face. Then, I'm going to introduce you to something called the Composite Index, and we'll get into its secret weapon, divergence. After that, we'll pull up some real-world charts to see this thing in action, and we'll wrap up with how you can use all this to get a real, tangible edge in your trade.
Okay, let's kick things off with the big dilemma, the thing that probably brought you here in the first place. If you've ever been frustrated by a standard indicator, you're going to get what I'm talking about.
I want you to ask yourself this. Honestly, have you ever been watching a stock, the RSI is screaming overbought, but the price just keeps on climbing? Or, even worse, it gives you a buy signal, you jump in, and then the stock just dives. It's a super common frustration, and it happens because, sometimes the RSI just isn't giving you the whole picture.
And here's why that happens. The relative strength index, as useful as it is what we call a lagging indicator. It's great at telling you what has happened, but not so great at telling you what's about to happen. And this can create a ton of noise, late signals, false signals, which can cause you to miss a great trade or, worse, get faked into a bad one.
So what if you could upgrade your oscillator? What if there was an indicator out there designed to be more forward-looking? Well, there is. Let's meet the solution.
I absolutely love this analogy because it just nails the concept. Think about it. The standard RSI is like a solo violin. It's beautiful, it's useful, but it's just one sound. The composite index, on the other hand, brings in the whole orchestra. You've got the brass, the percussion, the strings, giving you a much, much deeper and more nuanced picture of what the market is actually doing. So what is this thing exactly? Well, it was developed by a brilliant technical analyst named Constance Brown. And what she did was create an oscillator that cleverly blends two really key concepts, the good old relative strength index and momentum. By baking momentum right into the RSI calculation, the whole point is to lead price action, giving you clues about where the strength or weakness is before a big move happens.
Now, you don't need to be a math genius to get what's going on under the hood here. It's actually pretty straightforward. It starts with the RSI we all know. Then, it looks at the rate of change of that RSI. That's the momentum part. Finally, it blends all that with a very short-term, smoothed-out RSI. And what you get at the end is a much more responsive, much more predictive line on your chart.
Okay, now we're getting to the really good stuff. This is where the composite index truly shines. It is exceptional at spotting one thing that can completely transform your trading, and that's divergence.
Let's break this down because it's crucial. Regular divergence is basically your early warning system for a potential trend reversal. So, in the bullish case, imagine the stock price hits a new low. Everyone's panicking, right? But you look down at your composite index and it's making a higher low. That is a massive clue that the downward steam is running out and a reversal might be just around the corner. The bearish version is just the flip side of that. And then there's this, which is a bit more advanced, but wow, is it useful. This is hidden divergence, and it's not about reversals, it's about trend continuation. So in an uptrend, the price pulls back and makes a higher low. That's a healthy sign. But the indicator makes a lower low. This is often the market's way of telling you this is a buy the dip opportunity, suggesting that the main trend is about to kick back into gear.
All right, theory is great, but seeing is believing. Let's pull up some charts and see how all this stuff actually looks in the real world.
So, on a chart like this, you can see how traders used to do this back in the day. See those black lines drawn by hand at the bottom? A trader had to literally sit there, scan the chart with their eyes, find the turning points in the price, compare them to the turning points in the indicator, and then draw these lines to spot the divergence. It works for sure, but man, is it time-consuming. You really need a trained eye for it.
Now look at this. This is a modern chart, and it is a complete game changer. The indicator script we're using here does all of that heavy lifting for us. See those little labels popping up? The R is for regular divergence, that's our potential reversal signal. The H is for hidden divergence, our potential trend continuation signal. The script is automatically finding these patterns and flagging them for you in real time. It's just incredible.
So, after seeing all of that in action, let's boil it down. What is the actual practical edge you get by adding this tool to your arsenal?
Let's wrap this up with 4 key advantages.
1. You get much clearer signals because the composite index is designed to lead, not lag. 2. You can spot potential turning points with regular divergence. 3. You can pinpoint those high-probability buy the dip or sell the rally moments with hidden divergence. And finally, and this is a big one, you save a massive amount of time and mental energy by letting automated scripts do the hard work of pattern spotting for.
And that's our deep dive on the composite index. You know, if you found this breakdown valuable, if it sparked some new ideas for your own trading, do me a huge favor and hit that like button. And of course, make sure you're subscribed so you don't miss our next explainer on more of these powerful tools for traders.
But before you go, I've got a question for you. What is the one indicator that you absolutely cannot trade without? What's your go-to? Drop your answer in the comments below. I read every single one, and it's always fascinating to see what everyone's using out there. Thanks for watching, and as always, trade smart.